All right, hello everybody, and welcome to Crypto Claptrap. I am Chris Morelli, Chief Editor of True Options Masters, and I have with us today Mike Merson, our Managing Editor. Mike, how you doing today?
I'm wonderful, Chris. Thank you for having me.
Great. So, Mike, we're going to do something a little bit different today. We're going to be talking about crypto. Now, why on earth are we talking about crypto to our readers who read an options e-letter? Why are we doing this?
Well, if you like volatility in trading, if you like making big gains really quickly, and quite frankly, if you just like emerging asset classes where you're able to make huge percent returns in a relatively short period of time compared to something like the stock market, I don't see how you can't be in crypto for the past few years. I mean, I know you and I have both made, frankly, life-changing money in crypto. We had fairly early exposure to it, and we caught the right trends. And I just think that anyone who is allured by options trading and the kind of money that can provide should know more about cryptocurrency space and should be taken. My perspective.
I completely agree. I agree with you. So the way I see it, options and cryptocurrencies actually have quite a bit in common. The volatility that you mentioned obviously is one of the key factors. That volatility can lend itself to rapid price gains, and it could also lend itself to rapid price withdrawals. We saw another 20% drawdown in the crypto market, 10 or 20% drawdown in about an hour last week. I don't know about you. I was buying when that happens. Yeah. But is True Options Masters, we like to trade with volatility. We like to trade with leverage, excuse me. Obviously, we apply leverage with options to boost our gains. Also gives us the opportunity to invest smaller amounts of money for the chance at bigger gains. The price action really is what's so interesting to me. And I've been trading options for a few years. I've been trading crypto for a few years, and you and I have really only met maybe six months ago, and I didn't realize we'd kind of been on the same path. We're both young guys in our late 20s, early 30s, and we've, as you said, made life-changing gains in crypto. So I know neither one of us want to say exactly how much we've made, but I mean, truthfully, we've both made six figures trading this stuff.
Sure.
So I did very well on Dogecoin earlier this year. This house that I'm in, I actually bought it because I made a six-figure profit in Dogecoin. Everyone was telling me, why are you investing in Dogecoin? It was literally here, look at this article. The owner himself, the guy who created it, says it was a joke. Just like, well, you don't have to believe in this stuff to make money on it. To make money in something, it just has to be tradable. So what I hope that, Mike, we can do today is maybe talk to some of our readers who maybe just don't understand what all this cryptocurrency stuff is all about. Maybe make it a little less unfamiliar, less scary a little bit, pull back the curtain some. And I think as two young guys who have done quite well this, I don't know if I'd call us experts, but I'd say we're certainly not nobodies when it comes to this. So, but I think the first thing we should do, Mike, is we should just talk a little bit about what are cryptocurrencies. It's these things that are tied to blockchain, which are these weird things floating out in the ether, and it's very, very abstract to a lot of people. And I figured out some ways to talk to people about it to make it sound not so unfamiliar and scary. But what is your take on it? Just real brief here.
So let's just wind back the clock. I'm not going to bore you too much with history, but it all started with Bitcoin in the wake of the financial crisis in 2008. Anonymous actor named Satoshi Nakamoto, maybe one person, maybe several people, decided to invent a stateless peer-to-peer digital cash that anyone could send to anyone over the internet without using a central party, a central third party, rather, a bank or some other institution. And that there is the idea. When people were asking me to explain this 3 years ago, when I was talking about it at parties after the big crash, and, people were looking at me like, you're crazy, you're still in that? I'm like, yeah, I'm still in that. That I think is the best way to summarize it. It is money you can send over the internet without a bank needing to know about it, essentially.
And what was the point of creating this after the financial crisis? Obviously, a lack of liquidity during the financial crisis. Why do you think that it followed that?
I think why it followed the financial crisis in particular is because it became clear that the money we transact, typically the money that we still use to pay our bills today, isn't sound, and it's not. It's basically tied up with this central bank who makes decisions that impact all of us economically and fiscally without our real weigh in. We can't vote on the Fed chair or anything like that. These are decisions that are out of control. So this whole movement in crypto is about putting power back in the hands of the people. It sounds a little cliche, but that's absolutely what it is. It's about creating a new form of money that isn't subject to decisions that are outside of our control necessarily. So it gets a lot more complicated than that. And there are some cryptocurrencies that are very centralized. But this decentralized sort of buzzword you might be hearing a lot is the core conceit of the whole. It's all about moving money into this peer-to-peer system where anyone can participate. There's no walled garden, and everything is transparent and permanent on the blockchain. Now, I feel like I just made things more complicated.
No. So you tied it into really what the bigger movement here is, this idea of decentralized finance. So as you said, most of the world's currency kind of funnels through these centralized entities, these central banks. And what we've seen a couple of times in recent history is the system is broken. So I think what has precipitated, this is my personal feeling, the most recent bull run in crypto that we saw starting late last year, late in 2020, I think was probably precipitated by the COVID pandemic, the crisis that happened here. So similar to the financial crisis, we saw liquidity just kind of grind to a halt. There was just no ability for money to sort of move around the economy. And why do you think that is? Maybe it's because this current infrastructure we have, it still takes days for wire transfers and stuff like this. Whereas with cryptocurrencies, you can actually send stuff to people on the other side of the world as fast as I just snap my fingers. Right. And what I think that people are coming around to now is that we need the ability for money to move around faster. This is an economic concept that we talk about sometimes called the velocity of money. And that's just the ability for money to move around economies faster and more efficiently. And I think that's why we're beginning to see cryptocurrencies get adopted in some foreign countries. And then we're going to talk about that a little bit. El Salvador just adopted Bitcoin as its sovereign currency, believe it or not. And I think this is going to be a tremendous boon for the third world that now has access to the internet, but doesn't have access to banks, but they have cryptocurrencies now. So decentralized finance really is sort of the name of the game here. And that's a movement that's happening within. There's a lot of DeFi coins. We don't have to get into all that stuff today. Right. But decentralized finance is pretty much the name of the game right now. So
I do want to keep it fairly, sorry to interrupt.
No, go ahead.
Fairly basic today. One thing I would like to stress, the reason I think that the crypto bull run started late last year was both the inefficiency of money that you described, it's becoming more ridiculous by the day, how all other technology has advanced in the world. And yet, people still need to go to a check cashing store and pay a $15 fee to, get their money that's rightfully theirs. That sort of thing is ridiculous. It's a little bit that. It's also kind of the opposite. It's excess liquidity. So the Fed printed something like 25% of all US dollars in the past 2 years in response to the pandemic crisis. And so that finally, in a way that it hasn't really before, kind of hit the mainstream and people started to realize like, hey, this is going to be inflationary. And one of the properties of Bitcoin in particular that I haven't noted on just yet is the fact that it is scarce. So there will only ever be 21 million Bitcoins available in the world.
Right, it's like gold in that sense.
Exactly. It's a scarce asset.
So, I think I've heard before, an economist I used to work with used to say that the amount of gold in the world would basically fit inside one Olympic swimming pool. or something like that. And that's one of the reasons why it's so valuable. And Bitcoin has a similar trait.
Yes, and I mean that stat is baffling to me when you just think of piles of gold coins with Scrooge McDuck and things like that. But yeah, we've invented digital scarcity, which is a concept that's going to be very important to wrap your mind around in the next decade, in my view. So I just wanted to hit on that point. And yeah, today we want to basically introduce the idea of cryptocurrency to our readers, the true options masters. And also, we're going to take a look at the charts, take a look at the price action, because a lot of fun stuff has been happening in the last few weeks. You might have seen that 20% dip in Bitcoin and gone, oh, it's over again. Well, that's not actually the case because there's a lot more diversity in the space now than there was, when it was just Bitcoin, when it was just 100. Now there are thousands of these things out there, and they actually all trade differently. So is that where we want to start, Chris? What do you think?
I think we can get to that in a second. And Mike, I'm gonna let you share your screen in a minute and show us some things. I just want to point out to some more people, it's just like I'm pretty good at trading cryptocurrencies, okay, but I didn't buy Ethereum when it was $5. You bought Ethereum when it was $5, and I'm not going to make you tell us how much Ethereum you bought when it was $5, but it's over $3,000 now. So that's a 300x return, knocking on the door of 500x return. That's the kind of stuff that's the kind of opportunity that you see in the cryptocurrency market. And truthfully, we've seen some assets rise 100x just in the past year. So this is the kind of thing where I agree with you. You can't afford not to pay a little bit of attention to this space. So
and
I think, no, go ahead.
Well, one thing I'll say is I bought it around 10 or 12 bucks. I would have loved to buy it at 5. My God. It's still a fantastic return. To buy it at $5, you would have had to be really tapped into the space. And I'll also say that, I got a great tip from a colleague of mine. That's how I learned about this whole thing. But what I'm saying,
but even $5-10, I mean, you were buying what? But what year was that?
This was summer of 2016. And then it did nothing for 6 months, and I figured, oh, this is just another scam. Then 2017.
Then 2017, and the entire market just goes like crazy. Yeah, so that's very impressive, Mike, that you were tapped into this space 6 months before that bull market really even started. So I think that's one of many reasons why I'm really glad to have you on this team.
And I think that dictates why it's important to get exposure even now, even 5 years later. Because I'd be really surprised if all this stuff went away within the next 5-10 years. I've always looked at it as kind of a 10-year investment since when I got started, minimum. Of course, you can trade it up and down along the way, take your profits. But I think 5 years from now, people are going to be really astonished with, just how entrenched this stuff is going to be in creeping into legacy.
I tell people the same thing. If they're new to this, I tell them don't go into this trying to make a quick buck, because I think that's one of the reasons why we see so much of the volatility is people just trying to make a quick buck. I think that's what we saw happen in May. We saw assets rise too far, too fast, too many people hearing about it from their friends. I mean, truthfully, I was just walking around talking to random store owners who are just like, yeah, I own this coin and this coin and this coin and this coin. And I should have known then that's the sign of a near-term top. And obviously we saw the market crash almost 50% again. And then what happened in July and August, the market basically doubled. So, and we're basically almost back to where we were just a few months ago. So I do want to just state that, you and I believe that this bull market is not anywhere near over yet. I think we're going to see some absolutely insane price action over the next, 6 to 12 months. You might have a more specific time frame in mind. But I do tell people, obviously don't invest more than you can afford to lose. Don't ignore it just because volatility is scary. And if you have a long-term time frame like you're talking about, volatility doesn't matter. Just stick around. And this is the kind of stuff that can really, really revolutionize your financial profile. So I think maybe what we should do next is just talk about the different types of cryptocurrencies.
Yes.
So we've kind of talked a little bit. Okay, crypto is about digital money, more efficient money. We've got this digital world. The new digital world requires newer and better currencies that operate within it. Truthfully, the dollar these days, 92% of dollars are digital. Only 8% of the US currency in circulation is physical printed money. So this is just where we are. So and I hope that makes like an aha moment for a lot of people. And this is what I tell a lot of people to kind of make it click. It's just like, we're already in an age of digital money, and the best investments you can own, and I agree with you, they are investments, are cryptocurrencies. Some are better than others. There are now thousands and thousands and thousands of different cryptocurrencies on there. You don't have to invest in them all. In fact, there's probably only a few that you really want to focus on. A lot of them are just fad coins. Right. But I think basically the three types of cryptocurrencies, and maybe you can correct me if I'm wrong here. I basically look at it in terms of payment, platform, and projects. So payment basically means cryptocurrencies that are designed purely on a transactional basis. So Bitcoin, for instance, Dogecoin is another one of those. There's Bitcoin Cash, which is basically an offshoot of the big one. And I know there's a few others that are like this. I think maybe Zcash and the list goes on and on. But these cryptocurrencies, their main function is sending money to other people. So payment, that's the first one, first P. The second one, and this is kind of the big one, is platform. Now this is stuff like Ethereum and Solana and all of these digital contract providers that are creating basically entire blockchain economies. So these are these huge networks you keep hearing about, these large blockchain networks. And truthfully, they're basically creating this entire infrastructure for new and new projects, which brings us to the third P to start on. So if you have a platform like Ethereum, then you have all these different projects, and I couldn't even begin to name all of them that start popping up, and basically are using the Ether network to build their projects out. So essentially there's three types, and you can almost put them in two different groups. So you've got the currency one, the payment one, and then the platform / projects. And you got projects that are being built on platforms like Ethereum and Solana. Solana, I mean, is just absolutely haywire. I think it'd be up over 300% in the last month. Truly kind of emerging as one of the first true competitors, I think, to Ethereum. And if you haven't been in Solana the past month, you really haven't made a lot of money in crypto otherwise. So do you think that that's a good way to kind of separate these coins out, is those three Ps: payment, platform, and project?
Absolutely, Chris. Yeah, the thing with the payments side of things, especially when it comes to Bitcoin, the kind of utility of Bitcoin has transformed over the years. Still so volatile and so expensive, for one unit of it anyway, that the use case is kind of transformed into a store of value, more like a gold sort of a use case. There is even dollar equivalents to cryptocurrencies. There is a USD coin where each coin is backed by $1 in the holdings of the issuer of the coin. When it comes to the platforms, I would say Ethereum, Solana are definitely the top two at the moment in terms of activity. There have been many that have tried to dethrone Ethereum. Solana looks like it has the best shot at the moment. Many have come and gone. And then just to give an example of a project, something like Uniswap, you might have heard of. I've even wrote about it to our list before. It is a decentralized exchange where you quite literally swap one asset for another without any centralized third party overseeing the transaction. It is a peer-to-peer exchange where you swap one asset for another. And that's essentially the three types of cryptocurrencies in the space right now. There are things like NFTs that are starting to come up, which might be a little too much to dive into for this conversation, but it is fascinating. I'm still trying to wrap my head around NFTs.
Yeah, I would say let's avoid the whole NFT conversation for now. That might be the next episode. Yes. But when I'm just scrolling on my Coinbase and I'm just looking at all these different coins, I'm seeing, oh, this one is built on the Ethereum network. This one's built on the Ethereum network. But just to dive into this a tiny little bit more, it's people still kind of want to understand, like, what are these cryptocurrencies? So what are these blockchains? And I'm going to make it real simple for everybody. This isn't 100% accurate, but I think this will help people wrap their minds around it. Think of a cryptocurrency as a stock, and think of the blockchain that it's built on as the company. we've all bought stocks in companies. We understand that a stock is merely a representation of value in the company. It's no different from currency in a sense, where there's agreed upon value and people can trade it. And that is what a cryptocurrency is. You can buy it on exchanges like Coinbase is the most popular one. Uniswap is another exchange you can buy cryptocurrencies on. There's all kinds of different ones. There's crypto.com, there's Exodus, there's all kinds of exchanges. And all of these exchanges have their own cryptocurrencies, but they are basically they are projects. And you could think of them just as businesses that exist entirely online. And exchanges are one types of business. But truthfully, a lot of these platforms and these protocols and these projects, they have revenue. These things are operating like true companies. And I know a lot of people just think like, oh, this stuff isn't real. It doesn't make sense to me. It's entirely online. It's just like, yeah, we're in a digital economy now, post-COVID now more than ever. And it will never go completely back to where it was before. So, but maybe we could talk about that a little bit, Mike. I mean, the fact that some of these projects, truly, they're becoming robust revenue driving machines.
Yeah, just to explain how the revenue is actually. So someone totally new to crypto might not be aware that whenever you send a transaction on these blockchain networks, whether it's Bitcoin or Ethereum or many, many others, you pay a small part of your transaction in fees. And that fee is determined by a lot of different factors, which we'll dive into today. But the traditional method, or rather the traditional purpose of these fees, was to pay miners. Miners are the ones that mine these coins into existence, basically by running computers 24/7 using electricity. It's called proof of work. You use the electricity to mine the coins, and that proves that the coins are existence because the electricity is used. That's the most fundamental.
Yeah, and to your point about Bitcoin, for example, there being a scarce amount of it, you need really powerful computers to basically go online into the ether and find these things and mine them almost as if you were mining gold. And that's kind of what you're talking about, just to sort of complete the metaphor here.
Yes, exactly. And the difficulty has gone up exponentially since it. You probably would have been able to mine 100 Bitcoins every day on an old laptop back in 2009. Now you on a laptop probably wouldn't even be able to tap into 1/1000.
Well, yeah, and just like in the commodities market, when it's abundant, you don't have to go too deep into the earth to find this stuff. And then when a lot of it is out there and you have to drill even deeper into the earth, it's exactly the same thing here, to drill deeper into the internet, essentially.
Yeah. And one more thing is I would modify your companies and stocks metaphor just a little bit. So when it comes to something like Ethereum, the Ethereum blockchain is host to lots and lots and lots and lots of different projects. I almost see Ethereum as like an S&P 500 of crypto.
I think that's exactly right. I wanted to make that clarification. It's almost like an index.
I see your cat on the screen.
You can see my cat's tail. Yeah, he's interested in this crypto stuff too.
Yeah, he's trying to get long ether like everyone else. All right. So with that, Chris, is there anything else you wanted to cover? Because I mentioned to get to these charts first.
Yeah, let's get to the charts. Go ahead. Right. You pull up your screen.
This is my ether. So the thing about crypto that is really quite amazing, in my view, especially when it comes to things like Bitcoin, is that it's so pure. Now, what do I mean by that? I mean that because cryptocurrencies like Bitcoin don't have traditional revenue, they don't report earnings, they don't have earnings, really. They don't have CEOs that, get in trouble and get ousted from the company. So the price action in these things is really, really pure. It's pure supply and demand. And because of that, it's subject to trading emotions, which we all experience when we're investing or trading in something. And any price chart is essentially just a collection of emotions at any particular time charted on a 2D plane. That's the best way for me to describe it. So we can look at Bitcoin from a technical perspective, I think, and it's even more valuable than looking at stocks from a technical perspective sometimes. Another reason why is because it trades 24/7. So you don't have these big gaps where the stock will open 5% higher because it had a huge earnings. So let's just look at what's been going on with Bitcoin lately. We'll scroll back. The way I make my purchasing decisions on Bitcoin is really quite simple because the purity of the technical analysis makes it simple. When it breaks down trends, like it did back here on, I reckon this was September 2nd, broke this fairly short-term downtrend, that's when you want to buy. And from there, it rose, let's just do a rough calculation here, it rose about 10%. So that's a great way to make 11% on Bitcoin in, pardon me, what's that, 4 days? I know Bitcoin's a multi-trillion-dollar asset at this point, but that is still something that's possible. And let's look at the
now, Mike, just to pause you for a second, and not to diminish what you're doing here, you're just drawing lines on the screen. There's nothing too technical to what you're doing, but I love the way that you put it, that this stuff trades kind of purely because there are no CEOs, there are no market makers. It's just supply and demand and sentiment. Sentiment is so important. So if you've been trading for a while, whether it's stocks or options, this is a fun little playground where if you can basically remove your emotions from these things and just sort of look at what's actually happening, you can make a lot of money just trading on pure human psychology. And I think that's how I've made most of my money over the last year is just looking at these trends, these price charts. And again, all you're doing here is you're looking at this red line going down here. You're just looking at a series of lower and lower tops. And then the blue line, you're just looking at a series of higher and higher bottoms, which is bullish activity. When stuff breaks these lines, that is when you want to pay attention. So when it broke that red line, you're saying, hey, basically you could have made 10, 11% in no time at all. When it breaks that blue line, that's when you want to wait and start looking for support. And that's why you've got these horizontal lines here. Then you found that support. You see the bottom one here around the 43,000 line, a top one, the 46. And then once it breaks that 46, you want to see it break the 48. So a lot of this stuff, it's very pure. It's very simple. And this is why we want to bring people's attention to this, because this stuff actually doesn't require a lot of proficiency or expertise. It's pretty simple, actually. All right, go ahead, Mike.
No, yeah, no, I think that was a perfect interjection there. When you see support and resistances break, you can count on them to behave a little more predictably than you can in some cases. There's no press releases coming out from Bitcoin saying, "Don't worry, buy this stock." It's not that kind of an asset.
No funky deals happening after hours, and no breaks from trading. Like it is on 24/7. And obviously not everybody's trading it 24/7. But yeah,
absolutely. But, being a global asset too, meaning people in China are trading this overnight, people in Korea, people in Africa are trading this. So it really is on 24 hours a day. And that can lend to some definite stress if you're a short-term trader. And I know you reading True Options Masters, you might be going, 11% in a few days. Yeah, that's great. There are ways to leverage your crypto exposure should you want to, which we will get into in a little bit. It's a little tricky right now for US traders and investors, but there are products out there that if you do a little research, you want to get into that, and you have the capital and you have the sense not to get liquidated and not use too much margin. These are things you can do in case there are any more experienced traders out there watching this. This is just
and your exposure can be whatever you want it to be. Maybe you don't want to open up a Coinbase. I mean, a lot of the big banks and funds are creating ways to basically buy Bitcoin and buy Ethereum if you just want to do surface level investments in these. But again, there's institutional players that are in this space now. You think that they're getting involved in this stuff because it's not real, because it's a joke. No, it's because they're actually scared for the future of their businesses. If they're not in on this stuff, they see the sea change that's happening rapidly. But another way to just, if 11% in 4 days doesn't sound that exciting, you can also just trade smaller platforms and smaller projects than Bitcoin. Truthfully, Mike, I don't really trade Bitcoin very much anymore. I'm in it right now because I think it's going to lead the way higher to sort of the next phase of this bull run. But once it goes up, I'm going to sell it, and then I'm going to move into some more speculative assets. That's what I did last year. when this whole bull run started. And Mike, I don't know, maybe you can go back to September a year ago.
Yeah, let's
just so we can look at
to the weekly chart. So that was the hourly chart we were looking at. Now we're on the weekly
and I see you've got some lines going all the way back there.
Yes, I do. So this isn't going to make sense unless it's logarithmic, which is how you want to look at lots of emerging assets like this over time, as it kind of just smooths out the action and makes it more readable over time. These are just a couple of uptrend lines I've been playing with from the March bottom in 2020 when Bitcoin was trading at $4,000. A pretty brutal time for investors who have held on since 2018, but you've been rewarded if you held on since then.
Yeah, and Mike, I was not as active in this stuff until about a year ago. I know you've been kind of consistent all the way through, which kudos to you for that. You made the best rewards. But I think when you look in between like July and October of 2020, that's when I was really paying attention to this stuff, because I saw how quickly it came back. And then I saw this is setting up a floor, and not just a floor, but the start of an exponential curve. And this is when I really, really got in. And then you see that what you just crossed over, just bullish activity. And when it went up about 50%, you want to know what I did? I sold it. And then I moved into Ethereum, which hadn't started going up yet. And then when Ethereum went up, guess what I did? I sold that and moved into even more speculative ones. And it's just that simple. It's just a game of follow the leader. So that's what I'm doing again right now. I'm moving back into some Bitcoin. I'm going to let it sort of lead the market. It's going to be the general. And then after it's out there in the field, after it's moved up, I'm going to sell it. I'm going to move back into some more of the speculative assets.
Certainly. Yeah, no, that's a very sound strategy if you want to be more active with it. But I also think that this sort of thing is quite friendly to investors with longer term focus. If you think Bitcoin's going to stick around, I personally think it's going to outlive the both of us, and maybe even our children. Then you just want to buy some, and maybe buy some once a week, and just go along for the ride, especially as it goes lower. Anyway, this green line, I just want to point out, was the previous all-time high. It was very key resistance.
Wow.
Back at this point. So you can even see just the way that the market reacted. Some quick candlestick knowledge. When you see these long wicks come down, that basically means that the price went down to the bottom of this wick and then got bid back up to where the candle left off. So that's a very bullish thing to see. Then we see.
And these are weekly candlesticks, correct?
These are weekly, yeah. So it's the price action over 7 days.
Yeah, so green candlesticks, it went up that week, red, it went down, and the wick shows the trading range.
Precisely, yeah. So we retested the all-time high, sold below it, and then things really took off, and here we are today. Now, I do want to point out that if you look at these pink uptrend lines, there is some pretty peculiar action happening right now. So if we connect the candlestick March low of 2020, bring it all the way up to today, we've actually broken down from the wick line, which is the lower pink line that comes up here, and we've kind of retested that as resistance and have sold off from it. We're still holding the candle line, this one right here. So just another example of how you can use technical analysis, not just in the short term, but also in the long term, to get a gauge on where the market is at with these assets. I do want to move on to some outliers, though. So
sure.
For a long time, the crypto market kind of just traded along. That was the case in 2017, as Bitcoin went all the way to 20K in 2017. Most of the crypto market just moved along with it. But lately, we have genuine differentiation in space. So I'm going to skip over Ether because that's been trading a lot with Bitcoin lately. But I'll go to Solana. So Solana.
And Solana, just remind us, Solana is basically a new competitor to Ethereum, one of those platforms we were talking about, smart contracts and all that stuff. And it's had a absolutely just berserk couple of months.
Yeah, absolutely. I'm just going to go to the hourly chart just to show some of the recent action. Yeah, it was down. Oh my gosh, this was the beginning of September we're going back to here. Solana's been on a ripping run. It was basically after the May crash, it went all the way back down to around $20 after previously peaking, I want to say around 40 or 50. But for the past month and a half, you can see it's gone. So this was the beginning of August. I'm pointing out right here. This is $27, and it's basically done almost a 10x, or well, not a 10x,
close to 10,
close to a 10x
months,
since then. And one of the reasons that is because it's actually being used by people. So a lot of these smart contract platforms like Ethereum come out, and there's just no developers working on them. There's nobody launching projects on them. But this has the backing of a lot of that sort of stuff. It's also one of these Sam Bankman-Fried projects. He's the head of the FTX exchange, which even if you don't know crypto, you've probably seen FTX everywhere at this point, because they are buying up stadiums and they are becoming sponsors of NBA players and teams and all sorts of crazy things. So a lot of people are betting on anything that FTX and Sam Bankman-Fried is involved with. So I actually sold just a little bit of my Solana at around this level, and I'm quite happy I did. I basically just took out what I put in, or twice what I put in initially, which was I put about, I won't say how much I put in, but I bought this. I actually caught this one at around $5. So this is like another Ethereum level outlier for me.
Yeah.
But what I just want to demonstrate is that Bitcoin hasn't made a new high since April, something like that. I think that was the most recent high. We have new assets making new highs all the way out here in September. So that is really, really healthy and important, I think, for the digital asset space, that we have true differentiation and not everything is just trading along with Bitcoin. Here's another example. Atom. This is yet another smart contract platform in a very healthy uptrend, making new highs. Let me just adjust this hourly line. Making new highs. What else is there to say? And this is not something you need to go diving into, Chinese exchanges with a VPN or anything to find. This is on Coinbase, and not only that, it yields you 5% just for holding it on Coinbase. So there is so much opportunity in digital assets right now. If you don't want to trade them on leverage, I don't blame you. It sounds like a real headache, but you can buy and hold these things and get actual yield on your money.
Insane yields too. It's very, very difficult to get a 4 or 5% yield. Now, you could compare, these cryptocurrencies almost to junk bonds, in the sense that they're higher risk. But why do you think that some of these projects are giving out these high yields? It's because there's so much money flying around this space that it's easy for them to do it. And it's just, and that's just, I want a few of these details just to crystallize with some folks, just so they understand, like, you can't miss out on this. Like, this is a true financial transformation that we're watching unfold. We're watching history in the making, and it's exciting.
Absolutely. There's one more thing I want to cover, and when it comes to the charts, and when it comes to sort of how, I don't want to say vulnerable, but it kind of is vulnerable, this space is to things like news and emotions. So, how I said there are no CEOs or press releases for Bitcoin? Well, that's true, but there is a lot of narrative fuel that inspires traders to make decisions. That's true of any market. So I just want to take a look at what happened with Litecoin recently. This might be one of the silliest looking charts, or silliest looking 2-hour periods I've seen in a long time. So this was yesterday. News broke, or fake news broke, rather, that Walmart was going to accept Litecoin as payment at its locations, which would be massive. There's no major retailer accepting cryptocurrency at this time. So but
people believe that we could soon see something like that happen. So I think the market was ready to accept this sort of truth, fake or otherwise.
Well, they clearly were ready to accept it, because they bid Litecoin from around 173 all the way up to 237 in the span of an hour, which is truly ridiculous. Once it became clear this news was fake, we sold all the way back down to
right
where
back
we
to where
started,
it was.
which is insane. These is the only, excuse me. This kind of thing can only happen in an asset that's so emotionally charged. And that's
Yes.
why I don't blame people that don't want to trade it like this. Because if you were in a leveraged position, like let's say you were short Litecoin when that news came out, you got blown up in a real major way. And it's just not, for a lot of people, it's not worth having that kind of exposure when things are quite so volatile. So that's something I just wanted to point out. And that actually leads us quite nicely into the next thing we wanted to talk about, which was, there's a lot of narrative fuel driving these price movements right now. And it's really becoming clear how important this asset is going to be. There's things happening every day. You mentioned earlier El Salvador. So they have adopted Bitcoin as basically legal tender in the country. You can pay for, anyone that lives in El Salvador and does business in El Salvador has to accept Bitcoin as payment. Now, I have mixed feelings about this. It seems a little bit tyrannical to force people to accept Bitcoin. It is an option, but if someone comes to you with Bitcoin, you have to be able to accept it. So that's just something I'm keeping an eye on, and I think is kind of an interesting experiment taking place. But there's lots of benefits. So El Salvador, I saw this tweet yesterday, so I pulled it up for what we're doing today. El Salvador is going to exempt foreign investors from tax on Bitcoin profits. So obviously they're doing this to attract investment in their country. This is their president, Najib Bukele, I believe his name is. I'm struggling with a takeaway for this, but what it tells me is that this stuff is finally being recognized by at least a minor global authority. The leader of a country is accepting it as payment, and that is, it kind of feels like the first domino to fall. So that's happening right now. And then you sent me this yesterday. This is the kind of thing when people talk about disruption in crypto, this is what they're really talking about. So most people, when they want to send money to a foreign country, they have to use something like wire transfer or a Western Union, which it seems archaic by crypto standards. You need to pay pretty high fees just to send even a small amount of money. And you have to go to a physical location. You have to, talk one-on-one with someone. And then at the other end of it, the people receiving the money have to go to a physical location to redeem it. And the example that they mentioned here is that, in El Salvador, a lot of ne'er-do-wells like to hang out at these redemption locations and just straight up rob people. So this new Bitcoin wallet push from El Salvador could basically shoo out Western Union and really open the world's eyes to potential of this, digital only money transfer system. So we just think that's super interesting. I know I'm kind of ranting along here.
No, and there's a much bigger point here, and I think that you're right that this might be one of the first dominoes to fall. Is what we see happening in a lot of smaller countries is they now have access to the internet. There's almost more smartphones that are in the world now than there are people, or just about as many. So people have internet, but they don't have banking yet. A lot of third world countries don't have banking yet. And they're too late now, because now there's an alternative that's much easier to adopt, requires less infrastructure, is cheaper, is easier to move around, more utility, more liquidity, everything. And I think finally, we could see some massive growth happening in emerging countries, and even some bigger ones.
Yeah.
Thanks to what we're seeing in cryptocurrency now, and it's going to be a massive disruption to, sort of the old world, archaic, financial authorities.
Right. And I mean, a lot of even what I call the legacy financial system, stuff like the stock market and central banks and, the bank you go to deposit checks, that stuff is kind of moving over to the crypto and blockchain space. There are companies out there that have tokenized securities. So they'll hold the shares and you can buy, 1/100th of a share of Tesla, which you would never be able to do in a traditional brokerage account. Well, some of them allow it, but, and what's even crazier is you could take those shares of Tesla, and I could be wrong about this, I'm pretty sure you could send them to someone else, which is not a function that exists within the legacy financial system. If I wanted to gift someone 1/100th share of Tesla, that would be impossible. So it's really just opening things up in a way that is almost a little bit scary in terms of how the government's going to react, because this stuff is going to get regulated eventually. Whether that'll be soft-handed or heavy-handed remains to be seen. But it's almost hard to imagine a future where this kind of functionality doesn't persist.
And I think something that we saw towards the most recent top in May is we do see a lot of, governments and bigger players getting a little scared and intimidated. China's been cracking down on this stuff a lot, and these markets sold off like crazy. But it's just noise, Mike. This news is just noise, no different from any other news that we see. It's all purely sentiment driven, but at the same time, you can't reverse the clock. We're seeing institutional players jump into this space, launching official like Bitcoin funds and whatnot. The stuff is more efficient. It's better suited for, and look, that ad on your screen right there, symbol, GBTC, grayscale. Here's an ad for basically a grayscale Bitcoin fund right here, which has been one of the most, I think the biggest mainstream crypto investments that you can basically purchase almost like a stock.
You can buy that.
But there's going to be a lot of volatility that's driven by, these bigger players, governments, financial institutions and whatnot. And we just got to ride through that volatility. It's going to happen. It's going to scare people out. They're going to be like, oh, this stuff is doomed. It's never going to happen. Wait and see. I don't think you can fight it at this point. It is moving across the world like a wildfire. And that's my take anyway.
Yeah. And as we know, as we preach often for options masters, with volatility comes opportunity. So on that note, there's one last thing I wanted to share today, which is the fact that cryptocurrencies are actually optionable, which means you can buy option contracts on various cryptocurrencies and get exposure to that level. So this news story hit earlier this week, which I found very interesting, on a crypto options exchange, Deribit is what it's called. It's not available to U.S. investors at the moment, so that's something to keep in mind. But one of the most popularly traded option contracts was for a $50,000 strike on Ethereum, which, I mean, if Ethereum goes to $50,000, I'm going to.
And again, it's really where right now, Mike? About 3,300, 3,500?
3 and change.
Yeah, 3,370. And these folks out in London are buying basically call options on 50,000.
That's the London hard fork, which is basically an upgrade to the Ethereum. That's the name for the upgrade is called London. All of the Ethereum roadmap updates are named after cities.
Gotcha.
Now this doesn't mean people necessarily think Ether's going to 50,000, but if you're buying a 50,000 call option contract now, you are going to profit as it rises anywhere towards that.
Yeah, well, I mean, even with that, you don't have to write it all the way, just the same as in the options market. If Ethereum were to just double from here and go to about 6,000 or 7,000, you'd see probably, a 2, 3, maybe even 4 times better return on that option.
Yeah, absolutely. So what I'm trying to get across here is just that the digital asset space is so much bigger than it might seem to the layman right now. You don't even have to dig that far to see how it's going. I mean, this article is posted on NASDAQ.com, which I thought this headline, if you showed this headline to someone in 2012, they would have leveraged their house to buy as much Bitcoin as possible, I would imagine. It's really just unthinkable. So that is all I had to share for today. I think, Chris, you and I wanted to do this show. Well, one, because we love crypto assets, and we don't we run True Options Masters, of course. But as we said at the top, this kind of stuff should appeal to anyone that's looking for, volatility, new assets to trade, and things that can really increase in multiplier wealth in a short time and at a velocity faster than I could have anticipated.
Yeah, and I know our other experts probably would disagree with me here. And the reason why you and I are doing this is Mike Carr and Chad Shoup, they're not as young and crazy as we are, so they're not diving into the crypto space quite as much as we are. But I think one thing that makes cryptocurrency actually, excuse my language here, maybe safer than options is it's almost like buying options without an expiration date, because cryptos trade like stocks. If you buy it and it goes down 80% like it did in 2017, and you just held on, well, you would have made a lot of money if you just rode that wave. No expiration date, so you don't have the stress of worrying about like, oh, I need this to bounce back before it hits my expiration date, or else I'm going to lose all the money I put into it. So you almost get all of the benefits of the price action, the volatility, without at least some of the risks. Now, that said, of course, investing in cryptocurrency is extremely risky if you don't know what you're doing, or if you sell too early and let the emotions get to you, which can happen to the best of us. It certainly happened to me when it fell in 2017, 2018. I definitely sold a lot of it, and I hung on to some of it, but I kept thinking, it's going to go lower. It's going to be a while. But once I noticed that exponential curve started last year, I mean, that just made a world of difference to me. So I agree with you. I agree with your take. I don't think you can afford not to look at this stuff now. If options appeal to you, I think crypto should appeal to you too. At least put a little bit of money into it, play around with it a little bit, get more comfortable with it. We hope that this video helped familiarize everybody with what cryptocurrencies are and why we trade them. And again, this stuff still doesn't make sense to you. Doesn't matter. You can make money on something you don't understand. You can make money on something that you don't believe in. Just don't bet the house.
Yes. Yes. Tread lightly and do not use leverage if you do not know how to use leverage. This is educational. This isn't financial advice. We think this is something everyone should pay attention to. And that's why we're bringing it to you. It's, that's why we wanted to start Crypto Claptrap. We talk about this stuff all the time. We have so much fun in our conversations. We learn so much from each other that we wanted to share that with all y'all. So I reckon we're going to do this once a month or so, and bring you the latest, what's going on the charts, what's going on in the news, the best opportunities out there, and whatever else that comes across our path.
Yeah, I agree. And it's a claptrap because we're not pretending to be anything more than we are. We've made quite a bit of money in this space, but we're not pretending to be, experts here. We just happen to know, I think, a little bit more than the average person. And truthfully, that's all you need. You just need to know a little bit more than the average person to have an edge in any market. So maybe as a final takeaway, if people are watching this, like, okay, but what do I do with all this? Hey, if you're looking for something to buy, again, it's not financial advice, but Solana has been going up a lot in recent months. It'll probably continue going up. In Ethereum, Ethereum is the second biggest cryptocurrency that's out there. It's been on a percentage basis doing a lot better than Bitcoin over the last year. because it just has more utility. It has more function. So safe or smart contracts plays like Ethereum and Solana. Hey, if you just want to throw $100 into something, those might be a couple of good options for you. I tell people, who are just like, what do I do with crypto? And just like, look, okay, just set an automatic buy on your Coinbase account, $10 every Friday. In 10 years, you're probably going to have $100,000. I'm not joking.
It's that simple.
It is that simple. So, and you can be as simple or as complicated with this as you want, but I would say everybody, do the least thing you can do is just download a Coinbase, buy a little bit of Ethereum. It's probably the best bang for your buck without getting too complex at this point. So
I would definitely agree. All right. I reckon that wraps us up, Chris. What do you think?
I think it does. All right, Mike, it's been fun. Thanks for doing this with me, and to all of our readers and viewers. We hope you enjoyed this. If you like this video, please subscribe to our YouTube channel. We're going to be trying to do videos like this more regularly. If you haven't subscribed to True Options Masters, you can just look up True Options Masters in Google. It'll take you right to our page. You can sign up. We publish every weekday and Saturday at 11 a.m. Our mission is basically to be the internet's best source of options and trading education that's out there. And our channel and our readership is growing rapidly, which is a sign that you guys are enjoying what we're doing, and we love doing it for you. So, alrighty, sir. We'll talk later.
Yep, looking forward to it.
Bye, everybody.